Stop loss is the point where you set your limits, your loss limits, and you set an automatic end to your trade. You instruct the exchange that you should stop your trade once the losses hit that stop loss mark. All right, that is that. Okay, now in wrapping up in this subtopic, let me quickly stress that cutting your losses actively before they get too large and unmanageable is the only way to be profitable in this business, and that is what the stop loss helps you to do. Don't wait until your losses have gone so big. In fact, it can be depressing. And be telling yourself, how I wish you'll not be saying how I wish, you'll be blaming yourself for not cutting the losses, stopping the trade when the loss was still minimal, because you think it will still go, the market will still retrace and go to your favor, even without having any proof. You are wishing it, you are faithing it. Don't faith crypto trading, please. One of the things I said in my Twitter space when I was talking in a Twitter space yesterday about market psychology. Don't faith it. I'm a born again child of God. I'm a Christian. I believe in God. I pray. I believe. But you see, crypto trading, no. You don't, unless you want to do miracle. In fact, don't even expect miracle. Don't expect miracle in crypto trading. Do your analysis and follow your analysis. Okay? Don't say that you believe, or somebody told you that he's a prophet and he saw a coin going high. As they are believing him, have your exit strategy, have your stop loss in place. All right, so that's what your stop loss will help you to do. Just plan your losses and leave when the losses hit your limit. Okay, so as a disciplined trader, what is expected of you is to stick with that decision you made before entering the trade. Fine, the decision you made before entering the trade, please stick to it while you are now in the trade. Let me wrap this up by stating that small, manageable losing trades are fine, right? They are part of every successful trader's day. Losing trades, but then on a small margin, right, is fine. They're part of it's part of the journey, part of the game. If you think you can avoid them, you are wrong. Actually, if you think you can avoid losing at all, you are wrong. Okay, and if you think you can avoid them by not using stop loss, in my opinion, you should just save your money and not even trade. Sometimes when you set a stop loss and you don't have time to look at the market, right? The market can go in your favor, but before it goes in your favor, it will get against you, hit your stop loss, and you lose out. Like let's say you lose out like 10% of your capital. And because you are not there to look at it or to enter again, the market will now begin to go in your direction, but you're no longer in the market. Do you understand? So people tend to, because of what I just said now, they tend not to use stop loss, so that even though the market will go against them or might go against them, they know that it will still surely go in the direction. So they don't use stop loss, so that the stop loss will not take them out of the trade. But that's not a safe way, because the market might not start going in a direction immediately. It might give you so many losses, or even hit a liquidation price. All right, so that's why he said if you think you can avoid them by not using stop loss, just save your money and don't bother trading. All right, take